Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming in YouTube. Welcome back here after a long holiday again, and we got some pretty exciting things going on here. Today, we're going to be introducing the VCPMI robot. Nikki, the robot, will be talking to us today, giving us her weekly AI for the first time. We'll be able to hear it. So it's going to be exciting here. Stay tuned. We'll be taking a look at gold, silver, and virtual currencies. Virtual currencies are just taking off. Something's going on, and we'll find out when you come back. Talk to you soon. Welcome back, everybody, and let's take a look at gold here. 1805.50, bid 1805.90, 1806, fast market. Silver, we're looking at 26.40, 26.40, ask, roughly trading about 26.40. So we are up nicely here. Reverting back up, $12 on the gold, 22 cents on the silver, 7 cents in the copper, and the coin is up about almost a percent, 0.84%. GBTC is up 1.67%, and GDLC is up 7.7%. We're highlighting here GDLC. It is the grayscale digital fund that currently is trading about $30 billion, and it is a diversified basket of virtual currencies that you can trade, like Bitcoin, Ethereum, and some other currencies, virtual currencies, assets that are beginning to become very, very popular. So the way that we're doing it is following this ETF on a pretty much long-term position. And so far, it's gotten out of the gate pretty nicely here. Let's come back here to our main markets here in terms of the gold market, and let's take a look at and see what the numbers look like here for today. What I would like to share with you is and introduce to you the VCPMI robot, Nikki the robot.
Hello everyone, this is Equity Management Academy with a monthly E-mini 500 S&P report for July 1, 2021. Summary. The monthly trend momentum of 3,851 is bullish. The monthly VCPMI of 4,238 is bullish price momentum. A close below 4,238 stop negates this bullishness neutral. If long take profits 4,340 to 4,396. Trading instructions. Monthly trend momentum, 3,851 bullish. The contract closed at 4,271. The market closing below the 9MA 3851 is confirmation that the trend momentum is bullish. A close below the 9MA would negate the monthly bullish trend to neutral. Monthly price momentum 4,238, bullish. With the market closing above the VC monthly price momentum indicator of 4,238, it confirms that the price momentum is bullish. A close below VC monthly would negate the bullish trend to neutral. Monthly price indicator. Exit. Longs, sell 1, 4,340. Sell 2, 4,496. Exit. Shorts, buy 1, 4,182. Buy 2, 4,071. Cover short on corrections at the 4,182 to 4,071 and reverse to go long on a monthly reversal stop. If long, use the 4,071 level as a stop close only and good till cancelled order. Look to take some profits on longs as we reach the 4,340 to 4,496 levels during the month. Hello everyone, this is Equity Management Academy, with a monthly gold report, for July 1, 2021. Summary. The monthly trend momentum of 1838 is bearish. The monthly VCPMI of 1813 is bearish price momentum. A close above 1813 stop negates this bearishness neutral. If short, take profits 1707 to 1644. Trading instructions. Monthly trend momentum, 1838, bullish. The gold futures contract closed at 1778. The market closing below the 9 SMA of 1838 is confirmation that the trend momentum is bearish. A close above the 9 SMA would negate the bullish monthly trend to neutral. Monthly price momentum, 1813, bearish. With the market closing below the VC monthly price momentum indicator of 1813, it confirms that the price momentum is bearish. A close below the VC monthly would negate the bearish signal to neutral. Monthly price indicator. Exit. Longs. Sell 1, 1876. Sell 2, 1982. Exit. Shorts. Buy 1, 1707. Buy 2, 1644. Look to take profits if short on corrections at the 1844 to 1707 levels, and go long on a weekly reversal stop. If long, use the 1707 level as a monthly stop close only, and good till cancelled order. Look to take profits on longs, as we reach the 1876 to 1982 levels during the month. Hi everyone, this is Equity Management Academy, with a monthly silver report, for July 1, 2021. Summary. The monthly trend momentum of 25.71 is bullish. The VCPMI of 26.86 is bearish price momentum. A close above 26.86 stop negates this bearishness neutral. If short, take profits 24.97 to 23.69. Trading instructions. Monthly trend momentum, 25.71, bullish. The silver futures contract closed at 26.16. The market closing above the 9 SMA 25.71 is confirmation that the trend momentum is bullish. A close below the 9 SMA would negate the monthly bullish long-term trend to neutral. Monthly price momentum, 26.86, bearish. With the market closing below the VC monthly price momentum indicator of 26.86, it confirms that the price momentum is bearish. A close above the VC monthly would negate the monthly bearish signal to neutral. Monthly price indicator. Exit. Longs, sell 1, 28.14. Sell 2, 30.03. Exit. Shorts, buy 1, 24.97. Buy 2, 23.69. Look to take profits if short on corrections at the 24.97 23.69 levels, and go long on a monthly reversal stop. If long, use the 23.69 level as a monthly stop close only, and good till cancelled order. Look to take profits on longs, as we reach the 28.14 to 30.03 levels during the month. Hello everyone, this is Equity Management Academy, with a weekly gold update, for July 2, 2021. Summary. The weekly trend momentum of 1840 is bearish. The weekly VCPMI, of 1778 is bullish price momentum. A close below 1778 stop, negates this bullishness neutral. If long take profits 1806 to 1834. Trading instructions. Weekly trend momentum, 1840, bearish. The gold futures contract closed at 1783. The market closing below the 9-day SMA 1840 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1778, bullish. With the market closing above the VC weekly price momentum indicator at 1778 is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish trend to neutral. Weekly price indicator. Exit longs, sell 1, 1806. Sell 2, 1834. Exit shorts, buy 1, 1760. Buy 2, 1732. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1760 to 1732, and go long on a weekly reversal stop. If long, use the 1732 level as a stop close only, and good till cancelled order. Look to take profits on longs, as we reach the sell 1 and 2 levels of 1806 to 1834 during the week.
Nikki, the robot, will be doing the weekly and the monthly reports for us through the AI of the VCPMI, which stands for the Variable Changing Price Momentum Indicator. Let's come back right into the market here and see that we're getting pretty much the targets completed as we made a high here of 1810, which is a critical area that we look for. The 1810 area is what I call the line in the sand, because it is the 360-day average price that activates the bullish trend momentum by trading above it, or the bearish trend momentum, which is where it is right now, by trading below it. And the market trading below the average price pretty much activated these lower levels that we saw here recently into that 1750 area, 1770 area that the market reverted from. So the challenge to meet and overcome is the 1810 area. By closing above 1810, basically it would activate the 360-day bullish price momentum and would reactivate once again the annual target of 2154, which is the sell one level of the report that we published back in September of 2008, where we forecasted the annual cycle beginning September 28, 2021. So let's take a look at the charts here for a minute and see the market relationship to the codes, to the VCPMI. If we take a look at the gold market, we made a high of about 1815 as of yesterday, and it traded through the extreme levels above the mean that essentially the VCPMI told you that you can expect sellers to come into the market, supply to come into the market, which is exactly what happened. The market reverted, and by the way, we recommended before the opening to take profits as the market was making, taking out these high levels here, expecting that we could see supply come into the market or sellers come into the market. And we did lock in some nice profits here. And as the market reverted back down here, obviously, it completed the reversion back down to the mean. And from here, we've activated once again a bullish price momentum by trading now for today above the mean, as you can see on the right of the chart. You see if I can zoom it in a little more, and we can see a little more clearly that the market reverted this signal back up above the average price, the daily average price of 1801, and pretty much activated the target of 1811, 1812. So we are in a bullish price momentum to the upside. Let's take a look at silver here. I can bring it up here in a minute. The silver is, I would say, the gold market is stronger than the silver market. As you can see, the silver market reverted. Let me bring this chart a little more closer. So you can see that the price got up through the average price, activated a bullish price momentum, but it came back down, negating this bullishness, and activated a bearish now price momentum. By coming down below the average price, it negates the previous signal, and by closing below it, it activates the bearish price momentum with the targets of 25.93. Now, this structure basically is the structure that we use on TradeStation to identify the Fibonacci levels, the Fibonacci pivot point levels that uses basically a maximum of 5 levels. And within those levels, now we can see that the algorithm identifies the average price. And for day traders, for example, which is really what you can use this for as well, it gives you the pretty much levels where you see and identify the highest probability mathematically, where you are going to identify the supply and demand exchange. And when the price trades around the average price, it basically recommends for you to be neutral. And if you bought it yesterday at the extreme below the mean that you see here, then the target is the average price, which was completed here. And we're beginning to see a bearish price momentum unfolding for the silver market. The question is the market going to revert back again and chop around the average for a little while, or come down to the 25.93 level? And if we take a look at the gold here, the gold is a little stronger than the silver market. Trading above the average price with the active target of 1812. And so it's a little bit of ambiguous signal today, as you can see, between gold and silver, and essentially where the price is in relationship to the Fibonacci pivot points that essentially identify for us the layout of the algorithm, which identifies this pivot points as a probability model basically for us. And tells us that if you're trading around the average price, it's a 50-50 standard deviation. So it recommends basically that, and the signals are written that the only time that it will be activated will be either if the market runs up to that sell one level of 1812, and then we see what the market does and how, if the signal is activated, or the level 2 of 1826.27 also has been activated. If the market comes down and close below the average, what it does is it negates the bullishness, the previous bullishness pattern or trend. And the first time that it comes down to the average, it neutralizes it. And the AI tells you that if it closes below, it would activate a bearish price momentum, and the extreme below the mean of buy one of 1886 is activated. And the highest probability mathematical levels for a trader to execute, a conservative trader to execute, is either at the buy one level or the sell one level. Now, the probabilities run that if the market comes down to the buy one level, you're looking at a 50-90% relative implied volatility to the mean, which is a 50-50 standard deviation, and the buy one level is a 1-to-1 factor. The same is for the sell one level. It is a 50-90% probability factor with a basically a 1-to-1 factor. The sell two level is a 2-to-1 factor with a 50-95% probability that if the price reaches these levels and the market validates and confirms basically the trigger point, that the market will revert back. So for us, in terms of, and for my students and my traders basically that are following this, and for you, that if you are joining me in looking at how to apply this AI from a strictly mathematical perspective, not a fundamental perspective, not an emotional perspective, but clearly following a very, very specific structure with very defined levels that identify, again, very specific criteria to follow. It is a methodical, systematical way of trading. Now, you can take the same AI and apply it into the weekly numbers, as we showed Nikki the robot tell us and share with us those numbers. And those numbers do not change. The weekly and the monthly do not change every day. Obviously, the weekly changes only once a week, so you'll have 4 AI reports a month and 1 monthly report. And if we can get enough juice going, you might say, then we're going to be providing the daily reports that will be created and produced by Nikki the robot. So we're moving completely into automation and a more precise, basically, way, I believe, of trading the market outside of these fundamentals that really are completely upside down to the market. You know, and the market in gold or the market in silver, even the market in virtual currencies, basically are trading the opposite way of the fundamentals. So we want to follow the direction, you might say, that the market is telling us. If we want to follow the money, basically, and for obvious reasons right now, the dollar is in jeopardy. It's in question regarding the tremendous amount of stimulus. You know, it's the same old story that it's, you know, just printing more money, and the Feds are just throwing, you know, billions of dollars into the market and essentially creating a false sense of security. I believe that, you know, you just got to ask yourself and question yourself, what would happen if the Feds begin to stop, or I would say begin tapering is another way, you know, to stop buying those bonds in the repo markets. They're buying over 120 billion a month. Now, I think we saw just a little bit of a preview of what could happen when Chairman Powell was just doing the talk. And all you needed was a little bit of talking to see how fragile the market is. And that's exactly what happened. You saw the massive reversion, the panic selling that came in. So you want to be always at these levels here, you know, prepare for the possibility that, we could see another panic sell-off develop. And when and I mean, in terms of even the stock market, as you heard early, Nikki, the robot, gave us the levels that the E-mini S&P pretty much activated on the short side of the market and completed the upside targets. And it's a question of simply of how deep this correction could be if it comes. You know, the thing that I can tell you is the longer they will continue to subsidize the stock market by printing all this money out of thin air, will make that correction that much more deeper, because it has to adjust and find its mean, its real value, which has been skewed as a consequence of all of this stimulus that's coming into the market, all this free money that's coming into the market. So you can see, and I've been pointing out, a tremendous amount of volatility develop, and, you know, prepare, adjust the volatility according to your account, and let's look for the upper end of the targets in gold at about 1834 and see pretty much what it does. So the targets that we're looking at are 1810 to 1834. Listen, thank you again for the opportunity to share this, just what I believe is incredible information here. And I look forward to seeing you next time. You take care, be well, have a great trading day.